say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound.
Welcome in to Just the Tips by the Stock Jocks. With me, you've got George here. I'm playing host today. Got Bruce and Gordo the Girthy, as his label here says on our video cam. How are you guys?
Gosh, I'm feeling very girthy.
Girthy.
I think it's your hair. It's your hair, George.
I brushed it just for you. There you go.
Emotionally tumescent, if you will.
Well, happy Father's Day to you guys. Did you get treated well today? Did your kids do anything for you?
They allowed me to exercise my dad skills all day long.
That's so nice of them.
They gave me a couple of minutes to work on this PowerPoint.
That was nice of them.
Kept evolving over the last 15 minutes.
I feel like I repeatedly got kicked in the balls today, basically. So,
Yeah. So a reminder of what kind of gametes you have. Yeah, you are a father.
Yeah, exactly.
Have you seen that video of like when a female lion wants to get laid to get pregnant, it like bites the balls of the lion over and over? And you see the lion like kind of crying. Yeah. There's what that reminds me of.
I don't think I have seen that before, but I'll go look that up.
Yeah, it's out there.
Well, anyways, so on this pod, maybe we'll just give a quick intro. So our typical format, we're going to be a little different today. So what we typically do on here is we pick a stock, we debate the bull and the bear case, and then we let you, the listener, decide what you want to do with that information. I will say up front, this is not investment advice, so please make your own decisions, do your own research, consult your own experts. This is for entertainment purposes and is our opinion and our opinion only. And I mentioned we're going to do something a little different today. So the format, we did this once before. When we get through about 10 stocks, we do a look back on our calls and do an update on how they're doing. So we're going to take the last 10 minus the one we just covered, Uber, the other week. It hasn't been enough time passed. But we're going to go back through those names and do a quick update. So everyone who was the bull for a stock will do an update on it, the ones that they covered. So we're going to go through those and just talk about it and kind of the performance and, again, kind of the updates in the market, if we've changed our opinions at all. Before we get to that, I guess there's been a lot of political news out in the world, or a lot of tension out in the world. We've got state governor or senators getting assassinated. We've got Israel blowing up, Iran. It feels like very uncertain times, and we saw a little bit of market reaction to that this last Friday. But going forward, over the weekend here, we're recording on Sunday. It seems like the intensity of the attacks between Israel and Iran continue to ramp up. How do you guys think that's going to impact the market? Is that something that our listeners should be concerned about? Are you guys concerned about it? Are you doing anything different in your portfolio? What's kind of your thoughts?
Gosh, man. Well, first of all, my first thought is like oil, right? Like, price of oil goes up. I don't know what percentage of production they are, but they're not immaterial.
Not at all.
There's all that's obviously
they bombed some of the oil fields, right? And I was, my wife was asking me, she's like, "Oh, does this impact oil?" And I was like, usually it still finds its way out into the market unless they bomb the fields, and they've been bombing the fields. I don't know how significant that's been, but they have hit some of their oil fields and their natural gas fields. Mm-hmm. So that will definitely have an impact.
Obviously, there's some risk of it spreads, right? Like, I don't know, if that gets most of the other countries around there are weenies, right? Yemen's not going to throw in. At least they don't have any good weapons. Like, I don't know, what is it? I don't know what this does to Russia and Ukraine. None of us are politicians, geopolitical analysts, but I don't know. Like, anytime you start having massive rockets hitting a very developed city, there's always chance for. I mean, they're talking about attacking some of our bases, right? Like, they're saying they're going to attack American bases in the Middle East. So, things could get.
They don't want the smoke.
Yeah, that's right. They always say that shit. But
they don't want the smoke.
So it's
I
kind of
honestly, I think like, Israel and Iran are both like pretty weakened right now, like especially coming out of the whole Hamas thing, and so I think it's like they're in a really tough situation. I think both sides are sort of. So I'm hopeful like diplomacy will prevail here. I also think like Russia is engaged in its own war. Like this is like an all-time like weak point for a lot of countries in the Middle East. So I'm hopeful that like they just go through this first phase and then they just resort to diplomacy, and it just ends up being like a nothing burger in the market. But I don't know. It could be wishful thinking. Just
the oil shock. I mean, this probably goes away, right? The oil shock is probably the biggest thing. Is that fair? I mean,
I think in the near term, like oil's up 3% again right now, like today. I think it's like a near term issue. If this persists, obviously it will continue, but I don't know. I'm hopeful it resolves.
Yeah.
I mean, you would
Buying
have thought
opportunity, maybe?
the October attacks on Israel would have been brief, and that here we are, coming up on a year and a half to 2 years later, and they're still
Dude,
war
what are
on
you talking
Hamas
about?
plus other neighbors.
We're annexing that part, aren't we? Like the West Bank or whatever. Isn't that what Trump said?
Oh, God.
We're gonna create a paradise.
Wasn't that one of his first
Trump was
things
also
he
going
said when
to,
he jumped into the
negotiate
office?
peace everywhere, and his first 100 days. That didn't happen.
Gaza's gonna be a colony, dude, just like Greenland. What are you talking about?
That's right. And Trump, we trust. Did you guys see any No Kings protests by you? By the way, we got caught in one here locally.
You got caught in one, or you were in one?
We had to drive through the forming one.
Did you run over anybody? You're like, get out of the way, you hippies.
I honked. I won't. I will say it was more supportive than against them getting out of the way.
There's here in the there was some protests here in Charlotte where I am, and up in the hippie area, Davidson College area, Steph Curry's alma mater, I believe, and downtown. There was some tear gassing on this really tiny crowd. I'm like, really? These guys the cops just want to tear gas these hippies. They really want to. By the way, I'm on the side of the hippies, and I say that facetiously, but yeah, I know it's kind of interesting that there's
probably have very few opportunities to tear gas someone.
Yeah, they're like, finally, this is my chance to
training
get
to
the
use.
badge. I'm gonna get my patch on my jacket, like tear gas somebody in the eye next to my beanbag.
I always think like the cops like you see at like major transport authorities like that are just strapped with like AKs and stuff. Like if you're holding that thing for like day after day, year after year, like you're just gonna want to shoot it. Like a part of you has got to be like, if anything
Bruce.
goes down at all, this thing's going on.
We are not putting you into law enforcement anytime soon.
No, but
Oops, my body
carry
cam is
around
off
a loaded
again.
gun
Oops,
for
it
years
is.
and years.
This thing needs to get some use, right? It's depreciating, right?
Just think about it.
Yeah, I mean, I guess that makes. Yeah, well, they say if you hang around a barbershop long enough, you'll get a haircut. Same kind of thing.
I mean, exactly.
Yeah.
It's all right.
Say
We'll
that
have our
about
AI
Brock
bots
too.
doing that soon enough. Our AI warlords will be holding those.
I can't wait.
So not too worried. It sounds like a little bit of near-term oil disruption. We think it'll pass, and the market will snooze this one off. I mean, the one thing I would say is like the Israel tech ecosystem. This can't be helpful for that. Israel is a big tech innovator. There's a lot of tech that comes out of there.
Yeah, a lot of companies in R&D divisions because of the tax credit. There's a Checkpoint. There's a lot of software companies over there too. So, but yeah, they're still going to work, right? They're used to getting shelled, right?
Well,
I mean,
people get
occasionally
pulled up from the reserves, right? So I think
true.
it all depends on how thin they're stretched, right? So it's got to have
small.
an
It
impact.
feels like what is there versus Silicon Valley, right? It's kind of a rounding error. So I don't know. Obviously, I feel for anybody that's any innocent people that are being harmed and and service people that are getting killed and all that. But it feels like in the scheme of the markets, it's kind of not. It's not the biggest thing. I mean, meanwhile, you've got kind of like military parades and massive protests in the United States and the return of fascism potentially. Like so, that to me is probably bigger. All the immigration. I read like 1 million workers have left the United States like foreign workers, some crazy number. I mean, maybe it wasn't 1 million, but it was a lot. I think it was 1 million of immigrants have left. Wow. I'm like, that's a big deal. And even like some of these Trumpers are coming on and saying, oh yeah, I can't believe he took a third of my workers. I really liked Pedro. And they're like, yeah, I like those guys. I voted for Trump. I didn't know he was going to come get Pedro. And even Trump is like kind of walking it back and saying, hey, let's just send the criminals back, not the good guys. Like against Steve Miller, they're so just schizophrenic. And just in general, like that schizophrenia is just painful as an investor. Like, how do you know what's, you're investing in restaurant stocks, for example, like maybe they'll all, half of them will, be unable to produce or, have to shut down half their menu. Like you're going to feel that somewhere. It's just chaos more broadly. I mean, this war in Israel and Iran it sucks, but like there's so much chaos in the world, yet the market's kind of like, I mean, it's been down for the last couple of days, but it just feels like we're up for the year still, right? So
we're up like 2% or something like that. No.
So it's sort of like, can't be good. An inflationary shock from oil, plus a sort of tepid economy, loss of the cheapest workers. Like, do you want inflation? It feels like we're engineering it.
Yeah, but no one's seen it yet. Every inflation print comes in low. So I mean, I think the the story is it's on the come. It's on the come. It's coming. But so far, people aren't seeing it. So I think the benign the benign is setting in, and people are trading as if today continues on forever. So we will see. I mean, I think if it comes, inflation comes, like the market will definitely take a hit. But so far, we haven't seen it.
But inflation has been inflation's come down pretty substantially. Like,
it has.
The latest read has been like
it's a lagging indicator, though, right? It's going to take a while.
And there's a data integrity issue.
Indicator, but the trend line is like very constructive, I think. So,
well, I feel like we're getting China level kind of inflationary data, like it's your China quality, because people are starting to call for investigations into it. There's always been problems with it, right? Like it doesn't, when there's technological change, they don't account for that, and they don't account for substitution, and
the biggest thing it's benefited is low oil prices, right? Because every oil touches every good. Oil prices have been extremely low. Maybe that changes now with Iran and Israel, but we'll see. But that's
labor
is
important
effect,
too,
right? Compared to like when Biden, when we hit inflation with Biden, it was Russia invading Ukraine. Gas prices went crazy, right? So you had both shocks.
Well, we also flooded the economy with like $2 trillion in cash, and there was a huge quantitative easing program where like the Fed's balance sheet was ballooning. Like, I mean, there was a confluence of factors. I don't know.
By the way, the beautiful bill, how is going to massively add to the deficit. Where's the discipline?
I think Elon said it best. You can have a big bill or a beautiful bill, but you can't have both.
Sometimes Elon says intelligent things. So,
you could have a slim, beautiful bill, I think is what he followed up with. But I honestly think like I'm hopeful that this Mideast thing actually calms down sooner than people expect, because I don't think like either of the sides have the firepower to extend here. And I think like the U.S. was going to have a conversation with Iran, I think, this weekend, and that got canceled due to the Israeli strike. But I think everybody is in favor of diplomacy, so we'll see.
Except for Israel.
They're just a pain in the ass. Like, we should, if they didn't have one of the biggest armies in the world, we should just invade their ass and turn them into a parking lot or something, because they're not great people.
Are you talking about Iran?
Yeah, it's a Muslim theocracy. Like, it's evil. And, I mean, I don't throw that around real lightly, but, like, it's a misogynistic culture that says we should all die because we're non-believers. Like, there's no way around that. There are many.
This is your chance to have a regime change. This is your best chance. Yeah. So if the U.S. and Israel believe that, then I don't know if it's over as quickly as you think.
I think the thing is, like, there's obviously deep connections between Iran and Saudi Arabia, right? And so there's like a balancing act that has to happen in the Middle East. You can't just like, even if we all want it, which I think we all probably do, we just can't march in there and take over. Like, so, I mean, we tried it with Iraq, obviously, Afghanistan, and
yeah, that went really well. That nation building thing has worked out great for us.
Yeah. So
more of that.
We're good at the initial invasion, and then suck at the rest of it. The main event.
Let's do it. The foreplay
do it.
complete.
Foreplay is complete. All right. So as I mentioned up top, we're looking back at the last 10 stocks that we have covered minus Uber, which we just did 3 weeks ago. So we're going to go through, let's see here. We've got Coinbase, CRWV, DocuSign, PLTR, DataDog, AppLovin, UiPath, Meta, Twilio, and CrowdStrike today. So we've got a lot to get through. We're going to try to power through them and go through our performance. Maybe just quickly, let me see if I can share my screen here for our YouTube folks. And let me see here. Tell me if you guys can see my screen. All right. So what we have here is kind of the summary of our performance versus the S&P 500. What we did is we took wherever we said that we would go long, we marked that as going long. The sells, we did not initiate a position. I think the last time we did this, we forced ourselves to go short, but as we've discussed, that's not really our intention here unless we say we're going to sell something short. So the goal really is, yes, we want to force ourselves to take a side, but end of the day, like, we are primarily long only. We're looking at taking long positions. And so when we go through those, I think our performance has actually been pretty strong. So just really fast, Gordo, looking at you, you were long Datadog. I think that was your one kind of bad call there so far. It's just a matter of timing, but that position is down 15% on an absolute basis. We look at both absolute and I would say relative. So when we say relative, we're looking versus the S&P. So in the example of Datadog here, we have the absolute position is down 15% since Gordo went long on it. The market is up 1%. So if it was neutral to the market, you would expect this to be up 1%. So the relative performance is actually slightly less or more negative, so 16%. Because of that. So we look at that relative performance, and that's really the key, I think, figure is if you just put this money in the S&P and walked away, would you do better, or would you do better taking these long positions? So as I mentioned, Datadog was kind of your one bad pick, and then you really did quite well on Meta. So that's up 23%, outperformed the market by 21%. And then the big winner was CrowdStrike, which was 91% on an absolute basis and 95% versus the market. So when we look at your longs here, out of the last really 10, I say 9, but we added CrowdStrike to this. You're up 33% or 34% versus the market. So job well done.
This is exactly how it happened last time, though, right? Wasn't it me eking out Bruce last time and you sucking, like, the fat kid in the cross-country meet? Just like last time. I know I was that fat kid in 7th grade. I was like, my social studies teacher was like, "Go, you're doing such a great job." I'm like, "Fuck off." So, by the way, I want to point out something. I just put this in our group chat. I asked ChatGPT about our podcast, and this is what it had to say. The Just the Tips podcast with the Stock Jocks isn't widely known or critically reviewed in mainstream finance or investing media. So its quality likely depends on what you're looking for. If you like casual investing banter with a humorous edge, stocks picked with high conviction opinions, not always backed by deep institutional research, a tone closer to Barstool Finance or Reddit-style commentary, then you might enjoy it as light entertainment. Think of it like hanging out with confident retail traders who have just enough knowledge to be dangerous. Fuck you, ChatGPT. First of all, being backed by institutional research, have you read a fucking sell-side report?
I think ChatGPT's read quite a few, actually.
They're fucking terrible. Backed by 90% buy-rated stocks with a conflict of interest. Fuck you. And we did detailed research, so fuck you, ChatGPT. I'll say it one more time.
Anyways,
even though I'm paying you $20 a month. So anyway,
I think they kind of nailed it. I ain't gonna lie.
Barstool Sports.
That's
too on the nose.
That's like a
little
perfect,
too on the nose.
That's a perfect description of what it is. I mean,
I think that should be our marketing tagline: Barstool Finance.
Yeah. In fact, we changed the name of the pod. Even though I'm a recovering alcoholic and don't drink.
They have just enough knowledge to be dangerous, and definitely not enough for you to make any money.
Oh my God. Well,
Oh.
scoreboard.
Well, I would
This
disagree.
GPT.
I would disagree on these results. So let's finish out
know.
here. So we won't go through all. We'll go through these in more detail. But even though you mock me, Gordo, my overall performance outperformed the market by 19%, and then Bruce outperformed by 30%. So I would say I would take
I
those
crushed it.
returns.
I don't know how I'm second here. I have all of these wins. I have the same loss as Gordo. What am I missing?
You just have too many, right? Like you've diluted the CrowdStrike with
That's
you've been long.
exactly
You've been more
it.
positive than everybody.
Yeah, I
Yeah,
give
but
you
I'm
credit
doing
for
more
more
right than
longs.
everybody.
The only long.
Your sharp might be better. Next time, do a sharp ratio.
Yeah, my sharp has got to be better.
Lever that bitch up.
You know
Your
what?
story
Also, I
different.
noticed there's one. You got credit for app loving on here for a hold. I gave us both a hold on that one. I think we were both. We usually force a position. We were pretty neutral on that, and it looks like I took it off of mine, but not on yours. So you get a 9%
That drags it down a
credit
little.
there. That might
That
be
drops it
throwing off
down,
a
right?
little bit.
It pulls it down. Yeah.
Well, I mean, I think his percentage. Yeah, we'll have to see how that rolls in. But either way,
It might go. I don't know how you're doing the calculations here. It might go up.
You need to audit this shit.
Yeah,
I love
because it's an average, because we assume that every position. I mean, there's a lot of things that are flawed with this, right? It's not a real portfolio. You wouldn't take even positions across these. You might change, right? We're not trading in and out of these names with new market data, which again you might.
You
do.
would sell CoreWeave almost immediately after you were wrong.
Yes,
By
CoreWeave is one
100%.
we should talk about. But I would say, bottom line, if you listen to the longs here and you followed along, like you would have outperformed the market from anywhere from 19 to 34%. I would say that's pretty strong. Anybody would take that performance, especially in less than a year. So, anyways, with that, let's quickly jump into it. So we've got a comp table here that we just throw in. I think we'll reference some of the valuations here. I don't think we need to spend time on it now, but you can take a look at kind of all the stocks that we're talking about and their relative valuations. And then first up is TWLO. So TWLO was one that I covered. This is kind of one of the ones. We covered this very briefly last time. I think we had just initiated on it. So this was back in October of 2024. TWLO actually has done fairly well since we initiated on it. So it's up 60%. I was a buy. Gordo and Bruce were against it. I think Bruce even said sell short. I didn't penalize you for this one, even though I could have.
That slide is wrong, right? It's just outperformance of 58%.
Yes.
Right?
It should be outperformance.
Okay.
So you can tell we're Barstool Finance here. So outperformance
hammered.
at 58%. Really quickly, like this is a stock that's still, I would say, valued in line with the market. So if I think about its valuation, it trades about 16 times next 12 months EV to EBITDA, 28 times PE, free cash flow yield of 4%. So if you look at the market right now, like the average market PE is between like 27, 28. So it kind of trades right in line on a profitability basis. They had a great.
But is there earning? Are their earnings growing 28%?
Their earnings.
1 year growth estimate is 8%.
Their earnings estimate they've been growing faster than that. So their last quarter they grew 12% organic. They are expected next year to grow 8%. So that's kind of what the street is baking in. So it's not a high. I mean, I like to throw that in because I like to think, is it a high hurdle for these guys to jump over? Do I feel like they can outperform that? Because I really think that's going to be the key, at least to how the stock performs in the near term. And I don't think it's a high hurdle for these guys. So they've kind of had a great quarter, and then they had an underwhelming quarter. So really Q4 kind of underwhelmed. The stock dropped, but then Q1 they came back and they had, organic growth, as I said, of 12% versus 7% the year before. The margins were a little weak, but the stock tended to rally off of it. They're buying their own stock. They're voracious buyers, so they're returning 50% of free cash flow to shareholders through buybacks. Really, the story here that you have to buy into, I think, is they're going to continue. They're getting more volume. They're getting more international volume, which is kind of dragging on their margins, messaging volume. So that I'm not too excited about. What gets you excited is you have to believe in the AI story. So some of the stuff that they're doing that's interesting is they're partnering with companies like 11 Labs. So if you're familiar with them, they do like the AI voices that are realistic. And they're launching a product called Conversation Relay that allows brands to now talk with their customers in new ways they hadn't before. And so they're focused on doing a lot more cross-selling. Now, most of the companies, I would say it's more of a volume play for these guys. They aren't really capturing that like extra AI, value creation. But it's really going to be kind of a uplift of volumes for them, particularly on voice versus messaging, which is higher margin. So overall, I would say like I would still continue to be a weak buy here. I'm not super excited about these guys. In fact, I would be happy to exit because I think the risk reward is pretty balanced. I'd take my 60% and go home. But I would watch kind of that AI play. Does it drive more volume to them? That's really what I'm focused on. So I don't know if you guys have any comments that you want to make on Twilio. Otherwise, we can keep going.
I would just add that like all this move basically came off of we covered this thing. It was like on its ass, right? They had just totally slowed, and their margins had gotten crushed, and like so basically they got a dead cat bounce, and people got excited thinking maybe they were, they finally are starting to have some momentum, and when it didn't happen, and they just kind of like, all right, this is not as bad as we thought, but it's really no better since then, and so it's sort of like. Yeah, I'm kind of like, this is probably trading sideways. Maybe, it's not, I'm not a believer, it's just kind of like a little bit of, a little bit of volatility around their kind of like come to Jesus moment, last year. And it just, I don't have any reason to think they're going to accelerate in some massive way, anytime soon.
I'm still a sell.
All right, let's
Stick
move on.
with it. Love it.
Meta platforms.
Ooh. Meta. All right, man. Long story short, they had a nice beat. There's some optimism around the ad recovery, in the economy. They got more impressions. I really feel like, Meta AI is kind of, the story, a big part of the story here, and their Llama, stuff. I mean, they've got 1 billion users, and I guess the glasses, someday that'll be Ray-Bans are so expensive, and but you really don't. I don't think their adoption's that great. But basically, it's an AI story, and they kind of defy, expectations with Facebook kind of just being a bunch of old people, a bunch of Republican old people talking to themselves. But Instagram is still on fire, and I think they're gonna be one of the big players in AI, and so there's gonna be several kind of companies that are leading in AI. These guys have the scale and. The pocketbook, the user base, to monetize or to get data from for AI. So I still like it. Hell, we'll talk about CoreWeave in a little bit. But I feel like they're a better play than CoreWeave, and CoreWeave is, up, 300%? So, yeah. Or, sorry, not up 200%.
And this is one that's outperformed since we initiated on. We were all buys on this one. All three of us were a buy.
But, yeah, we were all buys, and... still like it. Again, 20% outperformance since we did it, and we're awesome.
Yeah,
I'm still a buy on the AI kind of case alone. I mean, because they have the funding machine through Instagram and WhatsApp and Facebook and all their social properties to be able to fund the capex required for this data center build out to fund the largest language models ever. And only a few companies in the world can do it, and only a few companies have access to that capital and the data and the chips. And so I think Facebook is
well set up,
better positioned than 99.9% of the companies in the universe that we would cover. And so I think they have a real moat here.
I think they also.
I will say.
Oh, sorry. Go ahead.
Go ahead. I was going to say this. I was something really brilliant, which is that I feel like the Zuck rebranding has lost steam. He needs to do something totally different. He's initially,
he's still spending on Meta, but yeah, it's not the story here. I'm still a buy.
Yeah, the gold chain and the locks and the jiu-jitsu and the Elon fight. I miss him. I want Zuck back.
He should go back to being woke.
Go
woke, go broke, man.
Well, there's antitrust, right? I mean, Trump hasn't relieved him of that, so he's still got to kiss the ring. There's still a threat that they try to break this thing up. But I do agree, overall, I'm still a buy on this thing. I think also they a lot of the AI is being applied to their existing platform. Like their ads keep getting more efficient. So there's commentary around, the return on that. So it's not an expensive stock. I don't think we have it here on the slide, but it's still very reasonably priced. I actually added to this in my own PA during the Liberation Tariff, fit. So this was something that I added onto personally. And then they bought Scale. Well, they didn't buy. They invested in 49%. The new tech acquisition for the Mag 7 is you buy 49% and then bring the leader over. Scale's an interesting platform for AI. They really create synthetic data for companies, so that could be a competitive advantage. In addition to what Bruce said in driving the next leg of AI here. So yeah, I love the stock. I would continue to buy it.
Boom.
All right, let's move on.
Bye.
There we go. UiPath.
One of the most popular episodes of our pod.
Yes. And this was a sell kind of across the board. We all hate UiPath. I think it was mostly driven by like the shift in how people are using this type of technology and an erosion in the broader kind of RPA market, I think. They did report their last quarter and they were up 6% and they beat estimates, but I think it is one of those stories that's tougher to get around the long-term story here. There's so many headwinds in kind of their core market. And I think it's one of those things where if you're like a mid-single-digit grower at this scale, you're just not going to get a premium multiple. And so I think we're all, well, at least I'm still a sell here. I think it eventually trades down to like a normalized value where it maybe trades sideways a little bit, but it isn't a stock where I see a ton of latent upside.
Yeah, I think they're just going to continue to face so much, competition that they didn't have historically because of what LLMs enable. I do think they could see a short-term pop, like if you follow like Pegasystems, which is another like kind of like, business process automation type of stock. Like they showed some traction with their AI product. The market greatly rewarded them. They popped on one earnings call. I don't know if that's really sustainable. I would kind of bet against that. So I feel like UiPath, you might have a quarter where they show some great, traction on AI, but longer term, I think there's just going to be so much competition here. It's going to be hard for these guys to move the needle. So I would stay away as well.
Yeah, I'm kind of with you, George. This is also kind of one where, I don't know. Are they going to be with the AI winners? Not sure about that.
Yeah, no
conviction. Things kind of get subsumed. Yeah, Datadog kind of reminds you of that too now.
All right. McLovin. I mean, App Lovin. I need my Hawaii license up here. So this one has been really interesting. This one, maybe I'll spend a tiny bit more time on. So App has gone up almost 9%, while the S&P's basically been flat. So it has outperformed, but it's been a very rocky road. So Bruce and I were hold on valuations. Gordo, I think you were short. What we loved the stock at the time. I think they're executing really well. Their metrics are off the chart. The valuation was also off the chart. What happened is, they really killed it in their quarterly report. So a couple things, updates, like they're continuing to grow. Ads I think grew 71% in the last quarter, 16% quarter over quarter, like continuing just to accelerate momentum. They actually announced that they sold their game studio, so they had $1.5 billion of gaming revenue, which is like your mobile games. They sold that for $400 million plus some stock, so people put it in the range of like $800 to $900 million. I think was the total they sold it for if you value that stock, private stock. They also launched e-commerce, and so they've had some. That was one of the things that I think for me at the time was very interesting. Is could they execute in e-commerce? We didn't know, but take that same AI engine that they have for mobile ads, or gaming ads, I should say, and apply it to e-commerce. So as of the last quarter, they were at $1 billion run rate and 600 customers with that business. So I think they're showing a lot of really positive, signs there. The stock, however, hasn't initially reacted. If you kind of look at like February, March timeframe, it shot up on that earnings report. It's like, oh, e-commerce, is working. another great quarter. And then all these short sellers came out with reports around this stock. And so there was, I think, Muddy Waters was one of the big ones. There were some other ones that came out with a whole list of just, things against this company. One of them was they were copying really what Meta was doing, or basically back engineering into Meta's ads. And so they were claiming that, they required you to also run Meta ads at the same time, and then they were able to try to replicate some of the metadata. They were tracking children where they weren't supposed to be, so if you're underage, they're not supposed to track you. They were doing a lot of things just to, get revenue from ad clicks that were, below board. And so the stock plummeted on that, which really brought it back down to earth here, which is why you haven't seen this thing move too much. And so it's really become a little bit of a short battle with the shorts here. That's what makes, I think, this really, really challenging. But, looking at the valuation now, you actually get a very reasonable price for this type of growth. So if you look at it, you're getting a PE of 38 or 28 times EV to EBITDA forward. The stock is expected to grow. When you look at kind of the public, metrics, you'll see 21%. That's because they sold gaming in Q2. So they're actually, if you look at the ongoing business, it's expected to grow around 70% year over year. And if you look at the Rule of 40, which I always like to look at, like, what is this business? Is it doing that efficiently? Because it's one thing to grow fast, another thing to grow efficiently. Our Rule of 40, when you take out that gaming business, puts them at 145%. Like, that's off the charts. And so,
is that free cash flow margin plus revenue growth? Just to be clear,
it's 2x the rate of growth versus the profitability, but it's taking into account both. But it weights growth.
Okay, that's fucking weird. I've never heard that.
I don't think it weights it.
That's
twice.
the way I calculate it. So if you look back, the reason I do that
Introducing a new metric called Adjusted Tips Rule of 40.
No. It is actually
It's a George the Great Rule of 40.
I'm like, what the fuck?
So historically, if you
No, you
look
don't
at
multiply
that,
by
if you
two.
look at like how the market, if you do a regression on the Rule of 40 of like how companies are valued, growth is typically valued at twice the amount of profitability. And so that's why you do it that way as opposed to the other.
That's like adjusted EBITDA, though, dude.
Okay,
You gotta like.
so even
put a
if you take
disclaimer on
off,
adjusted Rule of
even
40.
if you took it, even if you took it off, you're still, the growth alone is 70%. They are highly profitable, right? Like you're still at a Rule of 40 that's just ridiculous. So I think their EBITDA margins are like around 60%. So, call it something high, or they're targeting around that. It's a ridiculous number. Like no one is near that. Palantir and them are the only ones that are high, and they're even higher than Palantir. And so the question is just like, do you buy into those short reports? And so there's been a lot of back and forth on that. I think the biggest thing that worries me out of all the accusations, and there's like a list of like 20 of them, is really kind of the copying from Meta. And so I think if, they are somehow, stealing from Meta, like that's going to be, Meta's going to come after them. So far, the company's responded by saying, Meta's done multiple audits of their platform and haven't found anything. Their new e-commerce platform, they have a lot of customers commenting that they're seeing, new leads that they don't get with Meta. There's a lot of things pointing to, in my mind, that relieve some of that risk. I usually stay away from anything like this. It's just like, hey, this is, there's a lot of uncertainty that you can't know for certain as an outsider necessarily. But the risk reward here to me, like you're getting best in class growth with a new line of business, that, in e-commerce that dramatically expands the TAM. I think I'm willing to take a little bit of a bet here on this one and say, I wouldn't put a ton of money into this, but if you said, hey, give me like 1.5% of my portfolio to play with and like go put in something risky, like this is where I would go do that. So I'm going to break my own rule and jump into something on, that has a short seller component here, arguing against it, and say I would actually put a little bit of money into this. Very speculative. I would not put a lot of money in, given you can't know for certain some of those things, but that's kind of where I'm coming out on this one.
For all of those reasons, I'm a hold.
Yeah, I don't blame you.
Okay, so it was Muddy Waters. So I'm going to throw that out there. I like the Muddy guys.
Mm-hmm.
I like the Morpheus guys even more. Free commercial for Morpheus. The Hindenburg guys. I don't like the chart. I'm a fucking Mo right now. I'm putting my Mo hat on. I mean, look at this thing. I mean, like this nosebleed valuation.
How's the
Supposed to be a big growth
nosebleed when you're
story.
growing that much? These guys are going to grow 70%. They've got a whole new business in e-commerce.
Yeah, but you know, like that growth's on the come.
They've been
And
growing
the stock's
70%.
not.
It's not anything out of line from what they've been doing.
And why is the stock flat? Just all these short seller
Yeah.
reports. I
The
mean,
stock
I
before
don't
that,
know.
it was the best. It was one of the best. It was the best performer, right? I think, or right up there in 2023.
Zuck is going to
Or
come over
2024.
and just, you know, rub his fro on them, and they're going to get destroyed. They've picked a fight with Goliath, so I don't know. There's enough to worry about. I mean, I get your point. Like, I always struggle with expensive stocks, even the high growth ones. But yeah, I feel like there's enough hair on this where I'm just like,
Think of the peg
know,
here. So if the P is 38, they're going to grow over 70%. Like, you're getting a peg of 0.5. That is dirt cheap. So you're being compensated, I
Yeah.
think, for. I don't look at that valuation as being high. I look at it as being cheap given the growth.
I just wouldn't want to pick a fight with Meta and their lawyers. And
Meta has
if
not
that's the-
engaged. So the thing I would note is Meta has not accused them of anything. So, you know, that's where if Meta had.
the day they do, right?
That's
the day
that's
that
the big
Zuck wakes
risk.
up,
Yeah, is you think Meta
know,
comes
from a
out. I think
jiu-jitsu
Meta would already be
practice.
after them. You know, they're doing $1 billion run rate in e-commerce. Like, Meta would be all over this if they had something on them. So that's where I kind of got over the hump. Is I feel like this has been out there long enough. Meta would have already, I think, had inklings of this. Like, they're putting a dent in e-commerce. Like, maybe Meta doesn't care about gaming as much, but they definitely care about e-commerce. But yeah, it could still come. That's the risk. That's the risk you got to take here. That's why I would not put big capital on this.
I'm gonna stay on the sidelines.
All right, fair enough.
This bad boy.
That's what I would normally do. But that's my spicy take for today.
All right.
Data Dog.
Data Dizog, doing it Data Dog style. Not an elite title, but I liked it. Yeah, I mean, at the end of the day, like, you know, kind of feel like these guys kind of got screwed. I mean, the stock's down 15%. It's one of the worst performing in our group here. And it's kind of blamed partially on just like, hey, growth stocks, expensive stocks, rotation out. And like the idea that OpenAI is building in-house observability tools, like, that's going to be an overhang. Like, just, again, similar to, it's even worse than Facebook, right? Like, OpenAI is kind of considered top of the heap. So I'm scared for them. But stock's not working. And, you know, they're still a relatively small company fighting, you know, huge competitors. And they have a moat, for sure. It's not easy what they do. But, yeah, I wouldn't short it here. But, again, I'm moving to the sidelines on this. Like, I don't. You know, they had nice. If you're beating and the stock's not working, like that's just like, and then you got this big overhang from a large competitor. Whether it's true or not, it's not going to work. How do you resolve that? Unless OpenAI comes out and says, you know, we're going to buy Datadog now. I mean, like that's. I think people are going to kind of question if their near term, you know, the multiple could compress further. So I think this is one where I'm going to move to the sidelines.
I am with you. I honestly, it's hard for me to tell sort of where this stock is going. I think in general, like if you don't have top tier growth, like you're sort of set up for more risk than reward. And so I'm kind of thinking about this market observability in general and like where they're going to potentially find new avenues to grow quicker, and it's not entirely clear to me. So I'm probably on the sidelines here.
Yeah, and I think our initial positions here are off. I think you guys were both buys and I was a sell, so I'm going to stay sell. I don't think anything's changed my opinion here. They're not driving new business that gets me excited. So, oops, go backwards. All right, let's move on to the next one if I can find the right slide. Yeah.
Oh my gosh.
All right,
All right.
Palantir.
Palantir.
I did see, as you're getting ready to talk here, I did see someone post on X how Iran has been learning why Palantir is trades at the multiple it does.
Yeah. Yeah.
As all
I
their
know.
stuff.
I saw that
Yeah.
too. I don't know if you guys have heard of this company. It's just
Tell us more.
a little meme stock here coming out of the blue. It's just happened to absolutely crush the market in the last 6 months. I know you guys were sells here. I'm curious to hear what your position is today. I mean, look, Palantir, like, for better or worse, honestly, has just become the poster child of the AI movement, like, writ large, like, across in every possible way. I mean, there's obviously a lot of tailwinds behind the largest hyperscalers, but Palantir is not a hyperscaler. In fact, they have a huge services piece to their business, but their kind of forward deployed engineer model is something that like everybody is kind of embracing and adopting at this point. And I think people are looking at this company with with rose-colored glasses, and the glass is half full, and like anything that they print on numbers, people are thinking is an indication that it's going to trade higher, and that the trend line here is like very significantly inflecting. And so like I think they've raced ahead of their valuation probably, which I'm not showing here, but I think the idea
What is the
that,
valuation? Because I think you can't discuss Palantir without looking at the
I
valuation.
think-
I don't know.
I think I want to say they're around a $300 billion company today in market cap.
Let's go back quickly to our comp table just to look at that. Oops. Okay, here we go. Oh no, that's not it. One more. Palantir.
Yeah.
All right. So.
Yeah. So they're trading at 80 times forward revenue, and everything else is probably irrelevant.
That's like a venture. That's like a venture
look,
multiple that doesn't make sense even.
Yeah. Yeah, I mean, look, I think it's hard. This is like, if you go back, this is also like a meme stock. It's trading like AMC or like GameStop, right? Like,
and how
this
have
is,
those done over the long term?
I mean, yeah, it's one of those things, right? It's like over the long term, these things all trade down, but over the short term, like it's hard, it's hard to short something like this. Your choices are really to buy it and try to time it right, or just sit on the sidelines. Because if you short it, you could just end up what was the name of that hedge fund that went out of business because they shorted GameStop? I can't.
Oh,
think
yeah.
of it right now.
It was the SEC spinoff, right? I mean, there was it was an SEC.
Yeah, that's it. Yeah, Melvin
Melvin,
Capital.
yeah.
That's right,
Yeah.
Melvin.
Yes.
Good name, by the way.
Yeah. So, it's just one of those situations, I think, where like there's only two things to do here. I mean, I would be probably a seller at this valuation, just given the run up in the stock, and just kind of like the expectation, like you couldn't possibly live up to an 80 times revenue multiple, and so I think it is one of those ones where you'd probably take your winnings at this point, but I don't know. It's hard to short it, I guess, more than anything.
Mr. Girthy?
Oh God, man! This company, I don't know. I kind of feel like you're long government shady shit, and so from that perspective, I kind of want to like it. I don't like the black boxy nature of their company, but fuck it.
You're going long
I'm
a
long.
high valuation?
It's working. Look at that chart. It's working.
Buffett's turning. I was gonna say in his grave, but he's not dead yet. Charlie Munger's turning in his grave.
I've got FOMO, like I'm tired of being this value guy, right? Like fuck it, like I want to join the party, which means you should sell it probably. The instant that I'm interested in something that's
Hey, you
got
had
momentum,
the best
I'm the quick
performance.
to bet.
We should listen to you.
Yeah, that's true. But
I'm gonna stay on the sideline.
Yeah, by the way,
eventually I'll be right. It's just a matter of timing, but no reason to play here from my perspective. Too high a valuation, but agree. It won't trade on the fundamentals in the short term as long as their business doesn't fall through. And with everything that's going on in the defense sector these days, I don't think that's going to happen. So it'll probably trade up for a while before it comes down to earth. But what goes up will eventually come down, at least for this one, I would argue. All right, DocuSign. All right, this one, I was doing great for a while on it. I was feeling really good, and then they reported earnings this last quarter, and they kind of took a dump on themselves, unfortunately. So DocuSign's down about 16%. Meanwhile, the S&P's up 5.5%, so underperformance of 21%. I was the only buy. You guys were sells. They did do. There's a couple things in this quarter. So the billings forecast was a little light. They're forecasting 4% in constant currency. What they highlighted, and I've seen this written about elsewhere on like platforms like Blind and some other places, is like they changed their sales comp, and so a lot of the 4%, like they were noting, like a lot of what they typically see is early renewals did not come in, and so the stock really aided on that basis. I think probably the sales comp did have a lot to do with that. I think the thesis is still intact here. Like you're believing in their contract lifecycle management platform, which they call now their AI version, which is the intelligent agreement management platform, and continued progress in international. It's a very reasonably, valued stock. 13 times EV to EBITDA, 7% free cash flow yield, and a P of 21, all below market. Is this a rocket ship in the near term? No, but I think the risk reward is pretty balanced here. I think you could see, a nice, call it 20 to 40% upside with relatively, minor downside. I don't think they're going to see huge churn. The expectations are super low. So I would continue to stay long here personally.
I'm on the side. I'm a sell. I mean, I'm not a sell per se, but it's just not super exciting. This thing is going to trade sideways indefinitely. I just don't think there's much upside in the name.
But would you argue there's more upside than downside risk, or do you?
No, I was going to say I don't think there's much downside in the name either. There could be more upside, just on the straight operating metrics or on the valuation metrics, but I just don't it's not I think there's better places to put your money to work than in a name like DocuSign at this point. I think there's also some however remote it is, some risk that this type of business model is the first type of business model to get disrupted by a pretty basic AI solution that could do most of this, but doesn't have the system of record, bells and whistles built into an enterprise architecture, which isn't, I don't think, rocket surgery. So
something like their intelligent agreement management platform that helps you draft and and also does e-sign on the side. Yeah.
But e-sign is such a big part of their business. You could see the e-sign real estate piece going away to a dedicated service that's just doing it for real estate and
that already exists, right? But DocuSign's the name brand. It's kind of what you go to. There's a lot of reasons of signatures and contracts are all about trust.
I think that moat just kind of disappears over time though. They start to they don't get the same pricing anymore over time. It's just so easy to create it. A lot of these platforms can just add it to their I just think the technology moat is almost
it's there's no technology
zero.
moat on the core product.
Yeah, and so I don't know. Then you're just sort of your moat is your brand, and I'm not sure how long that
you get embedded into a lot of workflows, right? I remember talking to someone at Citi who told me we could never rip out DocuSign. It's so embedded into every workflow that we have. So those are the big customers, and it's you don't rip out something that's already. It's this happens after you do this in this system. Suddenly, it sends out an e-sign to the customer automatically. It works. It's reliable. You don't rip it out.
I think that's true, but I think your pricing erodes, number one, and then two, where does your growth come from? There's not going to be another city.
So you're betting on international, and you're betting on the intelligent agreement platform. So I think if those don't happen, the stock trades sideways. If it does happen, you get some upside. That's kind of my view on it. So that's where I like the risk reward. I agree. It's not going to be a Palantir. You're not going to see huge numbers, but you could get 20 to 40% return, I think, with limited downside risk. So, it's a different profile of stock than a lot of the ones we look at, but that's my argument. But feel free to sit on the sideline.
Yeah.
I'm going to go with Brucey boy on this one. Yeah, moats are eroding. Adobe's going to eat, Google, whoever's going to eat their lunch. So, yeah, this thing's it's gonna be okay, but I can't get excited about it.
Yeah. All right.
Volunteer again.
I know.
That's right.
My mouse is going wild here. All right, CRWV, we all nailed this one.
Not. Nah. We all said, though, to be fair, we all were like, look, this thing could get AI hype, and, and that's exactly what's happened. Like, so I did this one, and it's kind of shocking. These guys come out and say we're going to spend, over $20 billion in CapEx, and it still runs with no, like, obvious, real moat, other than just, like, they have NVIDIA has invested in them and seems to give them preferential treatment, and they're in the United States, and and they just got where they're willing to just build out before it comes, so I think it's just crazy, honestly. Like it blows me away. The stock is up 200% since April 4th.
Yeah.
You just don't see that anymore.
And they traded down initially off the IPO, right? It was like
yeah, I mean it's just mind blowing. So. It's insanely expensive. I don't care. They don't make any money. They have all this CapEx, like no moat. Like it's still a piece of shit. What I should have said was hold. It was what I should have said.
We don't really typically allow ourselves to do that, but yeah. So fair enough.
We try not to, but this is one of those where like you just can't get get to a good mode and decent valuation. So like how could you buy it? But like you just buy it on the momentum theory and the hype theory, and you get rewarded for that in the short term. This will end badly. Guaranteed, in my personal opinion. So I'm going to, at this point, well, screw it. I might as well double down on the sell. It's priced for perfection and more. So that's where I'm at.
Yeah, I think it's a tricky one, but I will just say if you guys like CRWV, you're gonna love Nebius.
That was a good call, man. We should do that one. That was a good call on you. From you, yeah.
That's the only thing that George the Great has ever listened to me on.
My portfolio,
and I've given him a lot. Look, I think this sector is very strong, and I think CRWV, I actually do think they have a little bit of a moat because they are the brand name in the space, so they have access to GPUs in ways that other people don't. They also have access to data centers in other ways people don't. So, like, if you go to Digital Realty or Equinix or any of these large data center providers, and you're like, hey, I'm a new GPU cloud, like, can I rent some space? They're like, sure, we'll sign you to a 15-year contract. And, like, nobody can do that unless you have, like, massive scale. So they're one of the few companies that can do it. So I think they do have some, like moat in this space. They also obviously partner with NVIDIA and Microsoft and OpenAI and all these other guys. So I think they do have a little bit, but they're obviously, like, just traded way off the like reservation here, so it's hard to underwrite any kind of return, but it's one to follow.
Yeah, I think I would stay on the sidelines. I think and it feels like like the momentum has come off of NVIDIA investing more, like when the disclosures of the holdings came out, and then they were able to raise $2 billion in debt. Well, they need to raise a lot more than that. Like, they're going to have to dilute equity holders, which at this valuation is great for them. But, like, that's not going to go over positively. So, end of the day, like, I would continue to stay on the sidelines here. But I think it's trading more like a meme stock right now. So, we could see more upside, but I would stay away. All right, Coinbase.
So I'm still buying Coinbase. I think, look, Coinbase has continued to perform. They haven't like really hit their forecasts, I would say. They've been a little soft on both their revenue targets as well as their guidance. But sort of like a little bit external to Coinbase, they've had a lot of positive momentum. So the SEC dropped a big lawsuit against Coinbase. Like, they were trading like an unregistered exchange. Obviously, they've had a big benefit with Trump becoming the president. The administration is like very, very bullish on crypto, especially Trump coin and Melania coin.
Which is not traded on Coinbase.
The other thing that, the other thing that's obviously really, really benefited them is Circle went public last week, I want to say, and Circle traded up massively as well. And Circle is kind of a joint venture between Circle and Coinbase. They they invented kind of the U.S. dollar coin, which is sort of the gold standard of stable coins in the market. They get half
Not
of
as
the
big as
revenue
Tether,
from
but
Circle.
yes.
It's not as big as Tether, but Tether has come under scrutiny. It is a separate side conversation. Tether has come under scrutiny for a lot of reasons, whether deserved or undeserved, and Circle, or rather USDC, has not. And so that's why I say they're the gold standard. But nonetheless, look, I think if you're a bull on crypto, this is obviously the best place to park your money. Like, they do everything as transparently as you can in the crypto world, and I think as a long-term, as a long-term bull, this is a great place to invest. Some of I.
Gordo?
I fucking hate this thing. I just fucking hate crypto. It's fucking, rat poison square.
All right, Grandpa.
And plus,
okay, Boomer.
And so as soon as Trump starts losing some momentum in crypto, it's just a fucking greater fool theory. It's stupid. So yeah, I can't. I just can't do it. I still get texts. I got a text today. I
From your friend in Nigeria?
Saying
Yeah.
that too, but they're asking for my verification code from Coinbase. I'm like, somebody's trying to hack my fucking coin. I don't even have a Coinbase account anymore. I think I had one very briefly, and I think I was hammered or something, and during a relapse, and I created a Coinbase account, maybe to pay a stripper or something. I don't know, but it definitely, it skeeves me out. The whole thing sketches me out. So no.
Hey.
Sorry, that's part of that.
Yeah, I mean, here's what's interesting to me. So I put out this tweet, George, at Stock Jocks _Geo, if you want to follow.
One of the worst handles of all time.
A lot of the good ones are taken. So, like, if this is, a couple days old, but, like, they both hold 50% in USDC, right? There's some differences in their stakes. Like, I think Coinbase has, like, U.S. distribution, while Circle has, outside the U.S. international. But Circle's EV was $23 billion at that point. If you take that out of coin, you leave $36 billion for their exchange, which is basically under 6 times revenue for the exchange. And if you look at other, like, exchanges, they trade between 12 and 17 times. So either Circle's way overvalued or Coinbase is way undervalued on that basis. And you do hear a lot more picking up about stable coins these days. So I don't know. I don't know if I want to bet against Coinbase. I was initially a sell, but, I would probably be a hold to a buy.
You guys would both be buys if you just ignored what their business model was and looked at their financials. That's just the reality. You just don't like them because of what they do.
I think the Circle valuation is.
We should be unemotional about.
Well,
these
no,
decisions.
I don't hate it. I don't hate crypto by any means. I mean, it's not cheap. I don't know how to value the USDC piece, to be honest with you. I think it could be much larger, but I don't have a good feel for that. So,
I think you just ignore the USDC piece. How much what is it trading on as just a combined exchange? Or just on an exchange basis, including including Circle.
Yeah,
because it didn't have it didn't have a huge bump, did it, when Circle went out in the last week? Maybe it did.
No, it really didn't react. I mean, that's kind of the dislocation, is you look at it and it's like, well, unless you believe that just like the international opportunity for more stable coins is huge, then they should both be benefiting. So there's an arbitrage to be had there somewhere.
Okay.
All right. Well, that's our
lightning round.
That's our last one. So, anyways.
Oh, okay.
Lightning round. Oh no, CrowdStrike. I'm sorry, that's not our last one. I forgot. Wait, where's this chart?
Okay, yeah. So this is when Gordo and Bruce do our victory lap. CrowdStrike up 100%. 95 to be exact. S&P up 4%. 4% outperformed by over 90%. The only sell on the program here was George, the not so great. Everybody else was a strong buy. Absolutely crushed it. This is the preeminent cybersecurity name in the market. If you believe cyber is a thing, is a category, CrowdStrike is the company to own. They continue to execute. They have pretty strong demand. Like I think they're still probably priced maybe to perfection in some ways, just given their multiple is high relative to other cybersecurity names in the market. But I mean, this is a market that just has so many tailwinds that I mean, I think like artificial intelligence helps in so many ways because not only can you sell a new module as a cybersecurity platform, but also your adversaries get stronger. And so the need for cybersecurity becomes more and more important to most large enterprises. And so it's one of those things where it's like a virtuous cycle because of like how powerful AI has become for adversaries and for defenders. And so I think it continues to be a good like core position for folks to hold in the portfolio.
So initially I was a sell on it because this was after the blue screen of death event, and I thought it would have more of an impact on their business.
Dude, those
And
are
so-
always nothing.
I know
burgers.
they're usually opportunities to buy. I usually love like those dislocations, but I did really worry that customers were gonna churn away, and I keep thinking it's on the come, but I'm starting to back away from that. So yeah, I would be a hold to a week buy here, I think, on it now. I think customers have moved past it, didn't impact customers the way I thought it would, and so that was really my basis. And so now that that risk is removed, it continues to be a premier name. I think with more AI coming onto the scene, like, you know, security is just going to continue to be something that you really need. You need the best of breed, so I think Crowd's going to continue to do well.
All right.
Gordo, any change from
Well,
you?
that's it, huh? Nope. Still love it. Still awesome. I'm gonna ride this one.
All right.
Security's a thing.
Ride that pony.
And they're yeah, that's right.
All right. Well, we appreciate everyone tuning in. Please like, subscribe, and please tell a friend to listen. You know, and if they want to make 19 to 30%, just, you know, that's not investment advice. I'm just saying. Anyways, as we always say before we tune out, you know, bulls make money.
Bulls win.
Say make money, money, make
There's make
money,
money.
money, money.
Pigs get slaughtered.
Boink, we out.
Money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. I need that Skrilla on the Rilla. I need that Skrilla on the Rilla.